Hello everyone, Reid Abedeen with Safeguard Investment Advisory Group. Now, last week, I'm sure all of you have heard about regulators seizing Silicon Valley Bank and them becoming insolvent. And there's a lot of noise out there, ladies and gentlemen. So you hear a lot about, is there a banking system issue? Are banks all gonna fail? Financial institutions fail? So I wanted to send this message to you to kind of walk you through exactly what happened with this bank. So Silicon Valley Bank, because it did really well over the past years, and as deposits were coming in, like any bank, they're going to take this money and invest it. So you've heard of banks buying, loaning it out in home loans, credit cards, auto loans, things like this, because that's how they make money. Silicon Valley Bank invested a lot of their money in treasuries. Now, what's happened over the past 15, 16 months is the Federal Reserve has raised interest rates. And as those interest rates continue to rise, those bond values dropped. So think about it. If you have a checking account or money market account earning 1% and another bank is going to pay you a little more because rates are higher, you may take this money out of there and send it to another bank. That's initially what started to happen with Silicon Valley Bank. So what did they have to do? They had to sell those bonds at a discount to give depositors their money back. Well, in order to recapture this, they went and issued stock to recapture that loss, and it ended up creating a run on this bank. The other thing that happened was there's another bank that got seized, which is Signature. Now, they had a little bit of a different issue in that they were invested, but they also invested in some crypto that created them to have the same issue. But FDIC covers you up to $250,000. The other thing is the government says that they're going to insure all depositors regardless of the balance that is in the accounts. I'm not saying that's right or wrong, but all depositors of the banks were covered. So what does that tell you? That tells you that the bank did have assets that once liquidated are going to be recaptured by the government. So in essence, what we're saying is there is zero banking issue. We don't see this being an issue long term. Now, markets have reacted negatively towards it because the markets do not like uncertainty. Like in any bank, if there's a run on the bank would have to sell assets. They would have to sell bonds, they'd have to liquidate loans, things like this to pay back depositors. This is really not any different. So we don't see any issues with the banking system or financial system at this current rate. Now, we are here to answer questions. We realize, things like this that can happen can disrupt the norm. It can create some additional stress or uncertainty. We want to let you know that we're here for you to answer any questions you have. What's most important is as markets move, you've got something to protect you, and that's why we always recommend having a hybrid there to provide you a safety mechanism as there's volatility in the markets. So in other words, we're here to answer any questions you might have. Please feel free to reach out to us at any time. I also want to let you know that these are things that we monitor very, very thoroughly to make sure that we are being proactive rather than reactive. I want to thank you for your time. Please call us if you have any questions.